look at what we're expecting today. Evan Lucas joining us from IG in Melbourne. Good morning to you, Evan. Tell us about U.S. markets, because it did look a little bit touch and go there for a bit, but really did move higher on manufacturing data of its own.
Yeah, it did indeed. What an interesting sort of situation. We saw the futures last night when they actually dropped that Chinese manufacturing data really sort of fall away. Really impacted also the European futures, and it looked like Europe could have a really, really horrible night. Now, they were dampened, but they weren't obviously off as hard as they could have been. We did see sort of French manufacturing contract a little bit harder than expected, but it sort of managed to hold the ship. And then you move over to the other side of the Atlantic, and the US actually did quite well. They've moved up quite high, and I think it's more on the back of also the M&A talk out of there as well. We've obviously seen Facebook, but also having a look at the data that came out last night, it was relatively good. The disappointing one was the Philly Fed manufacturing index. That was a little bit weaker, but all in all, more green sort of shoots again appearing. Again, suggests that the US is continuing on its own merry way, despite the fact that we are seeing, you know, the tapering being unwound and all that above. All in all, it was a fairly flat trading in terms of volumes as well. So that is one thing to be aware of over in the US. They are coming to the back end of their earnings season. We saw Hewlett-Packard last night come out with their Q1 numbers. They were reasonable. Hewlett-Packard before the close was up around about 2.5% on that. And that's probably the last major company also out in the US to actually sort of watch. So it was an interesting session. It will probably mean that we will get a good lead towards the back end of this week. It has been a good week for us down here in Australia, particularly. Earnings season's been quite mildly strong, and I think that's the best way to explain it, and why we're actually up as well. So good leads coming out of the US. They have managed to continue to work on their own domestic data rather than actually what's happening, particularly on this side of the world.
Talk to us about what's happening with the dollar. I mentioned it above that 90 US cent level once again this morning, and that's after closing at about 89.54 yesterday. So why are we seeing it sort of pushing higher to that degree?
Yeah, and it actually dropped down to 89.3 over in the US as well, and then rallied all the way back up. I think the best way to explain it to you is that's probably fair value. Every time that we've, particularly since the RBA has come out with removing that easing bias, have moved below sort of that 90 cent handle into the 89s or above into 91 cents, it's come back to that 90 cent level, and that suggests that it's at true value, which has been a sideways trending market for around about 4 or 5 days now, and that also puts the idea that at the moment a lot of people are fairly, you know, consistent with the idea that maybe the RBA will hold the rates at where they are. They don't see inflation being a huge issue to the upside. They don't see Chinese manufacturing being so much worse that it's going to drag us well and truly into the, you know, the low 89, even into 88 cent handle like we saw before the RBA move. So that's the interesting thing I find out of that. And considering what we've seen from the earnings season, particularly on the cyclical side, listening to BHP, to Rio, also with Fortescue in there as well, they all found that at the back end of last year that their average Aussie dollar price was between 89 cents and 92 cents compared to around about $1.04 this time last year. So we are hoping to see the dollar go a little bit lower. That's why we've had a relatively good earnings season. But again, just what we're seeing, it suggests that the market believes 90 cents is true value, and it's going to be very hard to break out of that by looking what we're seeing in trading at the moment.
Okay, that's interesting. Where else are you looking today, Evan? Obviously, you know, reporting season continues, but the Japanese market had a pretty tough one yesterday. So what's really going to be driving this market through the afternoon?
Yeah, did they ever? They had a really, really tough market. And if you look also into South Korea, they were under a lot of pressure. So emerging market is still an area of concern. The Chinese and the Chinese story for emerging markets particularly is a bit of concern. So it wasn't just the South Korean one. You could also look at the Malaysian ringgit. That was also under pressure. Indonesian was also there as well. So that's the bit of the concern. Again, at the moment, it seems to be that everybody is trading on their own domestic news. So thankfully, from an Australian-centric point of view, we are probably going to be following what's happening in earnings season, getting a little bit of a lead out of the US. We do look like pointing up sort of 40 to maybe as much as 45 points this morning, which is a really good finish. As you alluded to, earnings season is still a really, really big driver today. Looking at Santos, looking at IAG, they're the two big ones. But again, having a look at what's happening in the commodity space, natural gas is now averaging around about $6 in terms of per kilojoule, which is an amazing number. That's a record high with regards to that price. You know, you've also seen a little bit of inconsistency across iron ore, also across aluminium, tin, etc., as well as been fluctuating. So it's a very hard read at the moment, and for that reason, it's going to be bottom-up views, which is the moment we need it to happen to be, because we've seen very much macro news dominating what's been our market for the last 6 months. We're finally getting some earnings season to actually back up the rally that we've had. So finishing the end of the week, we look like finishing up roughly just on around about 1.5%. If we do follow the S&P leads, that will be a really good finish to the week and continue on what's been a fairly strong earnings season indeed.
Yeah, the market's been up close to 8% in the past 3 weeks. And we've seen those strong reports from BHP Billiton, Rio Tinto supporting that move higher. But, some out there in the marketplace are saying we could be ripe for a bit of a pullback. What do you think might be the catalyst for that if, that manufacturing data from China was not?
Yeah. I think, look, again, it has to be China, and the reason for it is that Chinese Lunar New Year hasn't filtered through the retrospective data. There needs to probably be, the other thing about March is that it is dividend month, so you will see roughly up to around about 50 points coming out of the market on that perspective alone as well. So there's always a bit of a slight pullback in March, so it's pretty easy to call. We're also now heading towards that 6-year high level that we saw back in October, which was 54.57 was the top. So we are getting back towards that, and we find ourselves starting to move slightly sideways. So we got to it yesterday. We got to around about 450, on Wednesday. Came back off. Yesterday was a little bit soft as well. We look like trading back up above 54 well and truly today. And again, it will be whether or not we can get through that. So there is technical analysts that are sort of suggesting that, yes, we're getting to that level. Fundamental analysts are also suggesting that China is going to start doing that. So a lot of the general talk is to the downside. Again, if the US finally starts firing, because they've had one of the worst starts to a year since basically 2009, the worst February since 1933, if they actually come online and really finish next week quite strongly, it will probably override all those ideas and we will actually get that sort of kick as well. So there is positives to be found because the US hasn't fired this year, so there is leads coming. I just think you may see China retrospective data being a little bit detrimental to our index, and it's only going to be a pullback. I wouldn't say it's going to be a massive correction. It'll just be a pullback, and then we will test that level, and it'll be interesting to see how we go for the rest of the year.
Yeah, certainly will. As always, Evan, I know you're flexing your muscles, getting ready to do all your analysis on those results, so we'll let you go.
Thank you very much.
Evan Lucas from IG there.